I have a lot of people to ask me, Prosper, how do you always find really good trades and really good opportunities in the market? And in this video, I'm going to show you exactly how I do that. I'm Prosper Jonikin, former hedge fund manager and now founder of TradeTonic. TradeTonic is an options trading platform that's heavily quant based, heavily research based for serious options traders. Okay, we're already in the TradeTonic application here. We're here on the dashboard, and I'm going to show you exactly how I use this platform to find really good trades. One trade that we had already, which was the trade of the day a couple of days ago, let's log into our paper trading account here. One trade that we put on 2 days ago was this zero cost collar on Apple. As you can see here, we're already up $1,800 on this particular trade. So let's analyze this position. All right, we sold the 330 call on Apple. Now, mind you, this expires on July 24th. And then we bought the 310 put on Apple. And so this was a zero cost collar for Apple. And you may ask, okay, why did you choose to put on a zero cost collar in this stock and at this particular time? That's a really good question. So we kind of see here, TradeTonic is telling us, hey, it's almost time to exit this. We're right here at the profit taking. So I'm going to come in and go ahead and close this trade. But I want to point out this section here where a lot of the other options platforms don't, first of all, they don't give you trades to take, like really high probability trades to take. They give you a bunch of opportunities and you have to figure it out on your own. Secondly, if they do give you a trade to take, they don't really tell you when is the best time to exit and where to put your stop loss in. And so that logic we have baked into the platform itself. And so the platform tells us, okay, take profit on the long leg call when Apple reaches 314 with follow through, and you stop out 3.1% below the entry of 305. So we're going to go ahead and close this position. We're going to lock in those gains here. So right now we have 3 other positions that are open. We have a PLTR ratio spread. I actually put that on last night, and that's doing really good. Then we also have a vertical on Microsoft, and then we have a bull call spread on Apple. So actually, I put this bull call spread on last night. I think I put the Palantir trade on 2 days ago, right? So this position is up 431%. This is another trade that we're going to go ahead and close. So one thing about being a consistently profitable trader is you want to go ahead and lock in profits as you see them. But let's get back to the point of the video. So you may ask me, okay, how do you find really good opportunities to trade? And one of the reasons why I built TradeTonic is to answer that question. So like I said, I spent years managing money. I started my career on Wall Street, and then I went into wealth management, and then eventually went into investment management, and I launched my own hedge fund. And so for 5 years, I managed an event-driven fund where I focused on distressed credit, restructuring, and bankruptcy opportunities. And so my whole thinking behind that approach of managing my fund was we want to understand where we are in the macro cycle, right? Or not just the macro cycle, but just any cycle. That's where we start. Where are we in the cycle, and how do we position ourselves to take advantage of idiosyncratic opportunities, right? And so when you know where you are in the cycle, you can prepare for where you are and you can prepare for what's to come. And so one thing I built in, and a lot of other options, actually, there's no other option platform out there that provides this, is the market environment or the regime, right? And so we have over 32 economic indicators that are baked into here. Let me see if it pulls it up. Okay, it takes a while for that to load. So let's give that some time. And the reason why it takes a while for it to load is because we have over 32 indicators. And it's pulling in a lot of the information. Once that load, I'll show you guys. So let's go ahead and look at the, okay. Now, where I start at is I like to look at the overall macro environment, right? Where are we within the cycle? That's the most important thing. Where are we within the cycle, whether it's a credit cycle and a macroeconomic cycle, an interest rate cycle? Doesn't really matter. The market moves in cycles. We have to figure out where we are. And so right now we're in a reflation or a late cycle stage. And there are particular strategies that usually work best for this particular cycle that we're in. So let's go here to the top plays, right? This is one of the really cool features of TradeTonic is we provide you guys, when you have the pro account, we provide you with up to 10 to 12 top plays for the day. So every day, our engine, our data models, our quant models and our data models go out and find really good opportunities using live option prices, real live options chains that feed into our platform, and we find opportunities for you. So for example, we see here, like I mentioned to you, in this particular environment, collars work really well for the environment that we're in. So there's a JP Morgan collar right here. There's an Apple collar. There's an ExxonMobil, Facebook. Right, let's go ahead and dive into one. Let's see if there's one that we really like. So this is how I find opportunities. Now, a lot of my thinking and my thought process has gone into this model. And so let's dive in and look at Facebook. Well, first, let's take a look at the card and see what it says, right? So this is a regime fit. We're looking at a bull call spread, a vertical on Facebook. Why this play? We have a section that tells you exactly why this play works for this market environment. Okay. It's 8% in the money with the 29 delta and a model probability of profit of around 42%. Okay. So let's go ahead and dive in now. So right off the bat, we give you a synopsis of your max profit and your max loss depending on your risk parameters, right? So if we do a conservative position, we're just going to do one contract of this, okay? How to structure this trade, we tell you exactly which strikes to buy and the expirations to buy. And we also give you the actual prices here that you can use to say, okay, where's the mid? How do I get filled at the mid? So it tells us we want to buy, we want to sell the 702.5 strike call. We want to buy the 662.5 strike call with an expiration of July 24th. Okay. Let's scroll down and look at the machine learning insights here. And it just basically says the machine learning flags strong historical pattern match with bearish short-term drift, right? The play odds for this particular play has a 100% historical win rate match, similar to profiles that really paid us when we did our back testing. So we really like this, right? The machine learning gives us an 84% confidence interval for this particular trade. We're gonna take a look at the P&L analyzer here. All right, so our max loss is 1323. Our max profit is 2677. The 43% probability of profit, right? Also, we give you the P&L structure that says, okay, if the stock moves here or moves there, this is exactly what the profit could look like, and this is what your losses could look like if a stock moves in any direction, with plus or minus percentages. All right. Another thing that we factor in is statistical movements as well. So one standard deviation expected move for Facebook is roughly 12.4% to 13.1% within a 68% probability range. And that gives us a price range between 580 and 748 from where the stock is trading at right now. So let's see. Like I said, the probability of profit is around 43%. All right. Let's see the strategy thesis for this. Another approach that we like to really emphasize when you're looking at opportunities is what's the thesis behind the position that you're looking to take. Okay, so this is a vertical bull call spread, and I gave you the strikes already, right? With the 2-to-1 skew and a 43% model probability of profit, with a likely range of 37 to 49% depending on the implied volatility path and timing. So the delta leg is 0.3. I really like to kind of stay between the 0.3 to 0.5 or 0.6 range with delta because we're not paying too much in premium, but also the options is not too far of the money where it drastically reduces the probability of profit right there. So all this logic is really baked into the quant models that we have here. So we take a look at this. We like this trade. Let's go back to the analysis here. And what we're going to do is, if you're new to trading or if you're a seasoned trader and you really like the position, you really kind of want to do a little bit more research or test out the strategies, there's a couple of things you can do. The first thing that we have is we're going to add this to our paper portfolio. Okay. So that's already in our paper trading account. The next thing that we can do is there's an opportunity for us to back test this strategy, right? So you can come here and you can choose whatever strategy you want to choose, right? I want to say we were looking at the vertical, the bull call spread. This is the one, right? And then we can back test it. So if we back test it, it'll give us what this strategy could have done in the past. Now, the thing with me is I'm not a big fan of back testing because it's all historical. Some people like back testing, but we went ahead and added it in here to kind of give you another tool in your tool belt that you can use to really analyze your positions. Another thing, like I said, this tells us how to exit the trade right here. We have an exit plan right there. So we've already added this trade to our paper trading portfolio. Once you add the trade, you can come here to paper trading, right? And you can take a look and see the position is pending execution, right? The reason why it's pending execution because is the time that I put the trade in right now is after market hours. And so what will happen is, like I said, we use real live pricing when it comes to updating and adding values to our paper trading portfolio. And so tomorrow morning, when the market opens, it's going to give us a live mid price and we'll get executed on both legs at that mid price and we'll start tracking the P&L on that. So that's already included there. Yeah, so that sums up the video. Let me go back to the dashboard. Just to kind of show you guys again, top plays really consist of the highest conviction opportunities that's based on the quant models that we have within the platform. And so, like I said, we start with a macro regime looking at over 32 leading and lagging indicators to give us an idea of where we are in the macro environment. We use that as the premise or the base of where we are and what types of strategies fit well within that regime. Once we figure out what those strategies are, we scour the top 50 companies that are traded in the S&P 500 with the greatest market caps and the tightest bid-ask spreads with higher trading volume, right? Because we don't want any slippage for you guys when you're getting ready to execute trades, especially at large volume. Once we do that, we start to crank up our quant models. So we have 4 different pricing models that are banked into our quant models that price all the options contracts that flow through. So we use the binomial pricing model, the Black-Scholes pricing model, the Heston pricing model, and the volatility pricing model. And what that does is it gives us theoretical pricing for every options contract that flows through our platform. We compare that to the live market pricing of all the options contract, and we see if there's some discrepancy there. If there's some discrepancy where it's cheap or expensive, right, where you can either go long the cheap or sell the expensive, that's baked into the confidence interval and the ranking, the star rankings that you guys will see right here. It lets us know that, okay, we have this strategy for Facebook with the specific legs that we're choosing, right? They fall within a cheap or expensive position. And so if it's expensive, we want to sell that. If it's cheap, we want to buy that. Use those legs to structure the vertical, which ties to the macro regime. Okay, the macro regime says, okay, collars, verticals really work well in this environment. So let's find companies where the options may be mispriced, okay, that are in the top 50. The options may be mispriced. Let's structure a vertical spread or a collar or any other type of strategy around that particular company. And when we do that, we structure it to where the probability of profit is in our favor. Okay. All of that thinking and all of that analysis is done for you right here in this platform. So that's all I got for today. You're wondering how I find really good opportunities. And for example, like I showed you earlier, we made $1,700 on the AAPL Collar. We closed another position earlier today as well. Let's go and take a look at what we closed really quickly. So we made $1,700 on the Apple trade, and then we also made another $562 on the Palantir trade. So, and we placed the Palantir trade on the 14th, right? We held this from July 14th, and then we placed the Apple trade on July 14th as well. 7:51 a.m. We placed the Palantir trade at 8:18 a.m. Okay, so 2 trades where we made close to $2,300 on Apple and Palantir in 2 days. Today is July 16th. That's how we find phenomenal opportunities, and that's how we become consistently profitable traders in the market. TradeTonic is the best options trading platform on the market today. If you don't believe me, test it out. Free 7-day trial, test it out, and I'll see you guys in the next video.